Hey, Tim Sisson here with First Home Mortgage, and today I want to talk to you about debt consolidation and something we call a blended rate. Now, a lot of you are in the same position where you have this low mortgage rate from when you bought in 2020 or 2021, or you refinanced in that time frame, and you're looking at a 3% interest rate on the mortgage, which is the pillar of your financial profile, and you just don't want to touch it. Now, what's happened over the last couple of years? Inflation is going crazy. Expenses are going up and up and up and up, and wages are not necessarily following suit the way that we need to. Savings account balances are the lowest they've ever been, and credit card balances are the highest they've ever been. If you are in this situation, you want some sort of way to get out from under this credit card debt, but you're not willing to trade your mortgage as that game piece to do it. But I want to show you some numbers that might make you sort of open your eyes to the value in trading your home equity to get rid of this credit card debt. Now, here's an example I've drawn up. It's 4 credit cards of pretty large balances, $35,000, $20,000, $30,000, and $40,000 a piece, somewhere between 21 and 24% interest. And then those minimum payments that a lot of times they would incur a minimum of 2 to 5% as that minimum payment. And then, of course, this doesn't really even factor in the fact that you're probably putting extra towards those credit cards to try to chip away at them. And then we have another, personal loan, $60,000 at 11% interest. Sometimes credit unions and banks, they're offering these as a way to either consolidate debt or to put cash in your pocket or to pay for a recreational vehicle or something for your kids or whatever it might be. And then you have this little mortgage down here that for, comparing to the mortgages we're doing these days, a $350,000 balance at 3%, it's just a dirt cheap payment. $1,888, including taxes and insurance on a house in Calvert County. You might go, I'm never, ever, ever going to touch that, because why would I? It's a 3% interest rate. I'm not ever going to get rid of that. Totally understand that thought process, but let me show you something. This is a debt consolidation tool that we utilize through MBS Highway. It's a service that we pay for. Now, on a cash out refinance, we can't go above 80% loan to value. So even if you're consolidating debt and you're going backwards and maybe you're hesitant to do that, even in the worst scenario, you still have 20% equity in your property. Let's say we utilize a lot of that to pay off $185,000 worth of debt, eliminating $4,600 a month in payments. Again, doesn't account for the fact that you're maybe chipping away at those credit cards and putting more towards it. So that $1,888 payment, this is splitting up that principal and interest and taxes and insurance. Yes, your mortgage payment is going to go up. You're now above $4,000 a month in terms of a mortgage payment. Yikes, right? But you're trading $64.88 a month going out for $4,100 a month going out. Okay, that's $23.88 a month in savings. That's more than your mortgage payment was to begin with. But if you take it a step further, and you know that I've been paying that $23.88 out every month, I've been able to do it. Maybe it's not comfortable, but I've been able to do it. What if I took that amount, that $23.88, and then we have this clean slate, credit card debts are gone. What if I put that back towards the principal of my new loan? What would happen? You are saving 16 years on the amortization. So you're taking a 30-year fixed and you're making it a 14-year fixed, doing the same thing you've been doing for months. Okay. You've saved 192 payments, and look at the dollars saved in total interest over the life of that loan, the new life of that loan. It's 7 figures, my friends. This is big stuff, okay? I hope you can conceptualize what you can use your home equity for in creating some financial freedom. I want to be a part of this journey for you. I don't want you to be hesitant to call me because there's a sort of embarrassment of racking up credit card debt. That is a real thing right now. A lot of American consumers are faced with that. So you're not alone, and I want to offer a solution to you. Utilize the equity in your home to give yourself a clean slate, to give yourself some financial freedom, to get some of that weight off your shoulders of trying to chip away at these credit cards and just spinning your tires. It's like a revolving door. I put more towards the credit card each month, but then I use it a little bit, and then the balance is right back where it is, and it's charging 24% interest, and it's a losing battle with utilizing just your income or your savings. I totally get that part too. Some people have accrued so much savings and they have this nest egg that they never want to part with, similar to that 3% interest rate. I have a 3% interest rate and I have money in my savings and I'm never touching it either, right? I get why you wouldn't want to do that, but it's a losing battle over time if you don't decide to do something now about the debt that you've incurred. So call, text, email. I'd be happy to run these calculators for you. They're very cool. I love them. They're robust. I just plug in your loan balance, the debts we're paying off, the property value, and see what we can do in terms of cash out refi to give you some financial freedom. Again, Tim Sisson, First Home Mortgage. Thank you for watching. Feel free to share this with anybody that you think might be able to use my service.